Hello dear students, I, Dr. Anuradha Goswami, Associate Professor, Department of Commerce from the Bhopal School of Social Sciences, welcome you all for this video presentation. The title of today's lecture would be Auditing, and we will be dealing with our Unit 1 and the introductory part of auditing. Basically the content that in today's video lecture I would be covering would be introduction, meaning, definition and objectives of auditing. Now let us begin with the introduction of auditing. The term auditing has been derived from the Latin word audire, which means to hear. Actually, this technique of auditing is a very age-old technique, and in the earlier days, even in the time of the king and the queens, there were people who were maintaining the records related to the revenue being collected in the form of a tax from the masses, and they used to maintain the books. Now in those times, there was a learned person who was good in mental mathematics. That person used to go through these books of accounts being maintained by a bookkeeper. Now how the auditing was being done in that era? Actually, the person who was maintaining these books of accounts used to narrate the transactions being written in these books. And by listening to these transactions maintained in these books, that person used to frame a conclusion whether these books contain the correct and the authentic information related to financial data or not. This word auditing actually is as old as the word accounting goes by. It has been used in the ancient era and with the countries like Mesopotamia, Greece, Egypt, Rome, UK and India as well. Even in Indian scenario, we can say that few of our Vedas, they have also some reference related to the word auditing, and especially in a book written by Kautilya titled Arthashastra, it do have a mention of the accounting policies and procedures and auditing of a public finance. The initial era of auditing has a primary objective connected to it, and earlier auditing was done just to find out whether our books of accounts are free from error and fraud. But slowly as we moved from being an old civilization to a civilization where we have this industrial revolution and scale of business units become higher, our method of doing business is differentiated. Now there was a change, a gradual change in our auditing process also. So auditing also has evolved after our industrial revolution, and from 18th century till the current century there has been many changes that has been occurred in this method of conducting auditing, especially when now the size of business unit is so big. Like for example, in the case of a joint stock company, the owner does not manage the funds of the organization, and the people who are managing the business operations and the funds of the organization, they are not the investors. So in this case, for example, if you want to give a certain peace of mind to the shareholders so that they can rest assured that money invested by them is safe in the business unit and it is being used purely for the business purpose, not being misused by the managers or the directors of the organization for their personal gain. So here in the case of joint stock company, the auditing become all the more very important. Now there has been a slight change even in the objective of auditing, which says that now auditing is not merely checking off the books of accounts to find out and eradicate the errors and frauds being committed by the accountant through books of accounting. We now say that auditing objective has now been shifted to a primary objective which concerns about that if I am an auditor of an organization, my basic primary goal would be to find out that all the books of accounts prepared by the accountant and all the financial data being prepared by the accounting department, they really depict, that means my P&L account and my balance sheet, they really depict the correct financial condition of the business unit. So now with the passage of time, we have two dual objective going on related to auditing, that is A, to detect error and fraud, and B, just to make sure that all the accounting data do contain and depicts and reflect the correct financial position of the concerned organization. Now let us move ahead and we will just have a little understanding regarding the basic concept of this word auditing, that is what is auditing all about. So if we go by as per the book, Auditing basically is a systematic examination of books of accounts and records of a business organization to ascertain or to verify and to report upon the facts regarding the financial operation and the results thereof. Actually, auditing is concerned with the verification of accounting data by determining the accuracy and reliability of accounting statement and accounting books. It also involves the examination of vouchers and verification of assets and liabilities of the organization. The person who is an external and who comes and audit these books of accounts is known as auditor. In today's era, the basic qualification to become an auditor is a practicing CA. Now, to sum it up, we can always say that auditing in simple words means a thorough scrutiny of the books of accounts, and ultimate aim of this auditing procedure is to verify the financial position disclosed by the balance sheet and the P&L account of the concerned organization. Now, dear students, there are few definitions that are there in front of you which you can look into the screen, and apart from this there is a list of definitions that you will be seeing around in your reference books or in your textbooks. So, please go through these definitions, and it will reveal you the basic characteristics or the technique or the meaning part of the auditing. So, please go through these definitions. Let us move ahead and talk about what are the various objectives right now that we need to know about why at all we are conducting auditing of these books of accounts. So, all the objectives of auditing have been divided into two parts. One we call it as primary, another one we call it as secondary, although they also have their subpoints into it. So, when I talk about this primary objective, it revolves around the examination of the accuracy of books of accounts, and based on which the auditor will submit his opinion about the correctness and authenticity of these books of accounts to the appointing authority. Now, when we talk about the secondary objectives, these basically revolve around the detection and prevention of errors and also detection and prevention of frauds. Now, dear students, let us move ahead and look into these objectives one by one. So, let us talk about the primary objective of auditing first. Now, since we know that it is being divided into two parts, if I am an auditor in an organization, my first primary objective is to look into the books of accounts being maintained by the bookkeeper and the accountant as well. Now, what I am doing into it is, I am actually examining the accuracy of the books of accounts, whether the transactions that are being mentioned are related to that particular business or not, are related to that particular financial year or not, because I have to ensure that if any transaction has occurred in the business unit, it need to be there in the books of accounts, or else if there is any transaction in the book of account, it should have some documentary evidence proving its authenticity. So, I need to look into all the books of accounts, I need to go through the P&L account also, I need to go through the balance sheet also, just to find out that whatever is the value of the assets being depicted in the balance sheet, whatever is the amount mentioned against the liability, are they real or not. So, that based on this checking of mine, the second objective would be that I will now be in a position to frame an opinion about the fairness, about the correctness of the final accounts being prepared by the accountant, and I can tell to any stakeholder related to the business that this particular business financial data depicts its real and correct financial strength. Now, take a look at the secondary objectives that we already had discussed, basically which is being divided into two parts. One is detection and prevention of error. So, now we will just talk about first is detection and prevention of error. Let us just recall ourselves, although when you were doing your 11th standard accountancy, you did go through a chapter called as rectification of error. So, here we are just going to revise that chapter of ours, and first of all let us discuss about what do we mean by the word error. So, in general we all have an understanding that basically error is something that is being done by a human being, especially in this case a bookkeeper or an accountant, whereby they have committed a mistake. But the most important point here is the intention. Here when they have done something wrong into the book of account, their intention is not to cheat anybody. They have just done that a mistake because of a workload of theirs, or maybe for any another reason. But here the main point is that neither they are intending to steal the cash from the organization, nor they are intending to commit any kind of a fraud against the organization. Being a human being, sometimes since we are throughout a day, if we are dealing with numbers and figures, so we are tend to commit some kind of an mistakes. So any kind of an unintentional mistake that we commit in a book of account will fall under the category of errors. But when we associate this word error with the accounting data, now these are being segregated into a variety. Now what are the different kind of a error that might exist into the books of accounts? So we have a few examples here, like you might have already done in your accountancy. So let us revise this thing. For example, being a accountant or a bookkeeper in a business unit, I might commit error of omission. Now what do we mean by basically an error of omission? That is, a transaction has actually occurred in the organization, but I have totally forgotten to enter into the books of accounts. Either it could be total omission or it could be a partial omission. Total omission means a transaction not at all being recorded into any book of account, and partial omission means we might have entered into a journal but we forgot to post it on a ledger. Then is error of commission. Basically, a simple example of error of commission is whenever there is a certain figure that we have to write, but instead of writing the actual amount, we have written the higher amount. For example, amount to be written as 1500, we have written it as 5100. Then clerical error, we have numerous examples of this clerical error. But for example, when as a bookkeeper a person has done the wrong totaling, or if we have done the wrong carry forward or brought forward of the amount. Then next is error of principle. Now out of all the errors that we have just gone through, this is the most difficult one to catch on. So if as an auditor I am also very good in accountancy, for me then it would become little easier to check this error of principle. Basically there are certain ground rules which we follow when we prepare a book of accountancy. Now error of principle basically means that we have done something not as per the accounting rules or accounting standards. So for example, any amount to be written as a revenue area, we have put it as a capital area, or any capital income has been put into a revenue income area. So these kind of error will be known as error of principle. Now the last type of error that we'll see in this slide is compensating error. So basically what happened in this situation is that the bookkeeper or the accountant has committed two different kind of an error, but the impact of these error is such that the negative part of one error is being neutralized by the another error. So whatever is the impact of these errors will never be reflected in your trial balance. Your trial balance will tally. So if the outcome of one error is being compensated by another error, such type of errors are known as compensatory errors or compensating errors. Now if I am an auditor in an organization, now what should I be doing in order to either detect or try to give some kind of a suggestion to the owner of a business that how we are going to prevent these errors? So my role would be, in order to find out these error, is A, I will be checking the opening balances of the data by looking into the balance sheet of the last year also, because last year's balance sheet's closing stock would be the this year's opening balance. Plus I will also check the posting being done from the journal to the ledger. I will check the total of the amount being done by the bookkeeper in the subsidiary book. I will also find out the total of the castings and the amount of the carry forward and the brought forward. I will also try to tally ledgers and the amount written against the debtors and the creditors by making a comparison between the list of debtors and creditors, and along with it I will tally it with the ledger account. Also I will make sure that whatever transaction that has been occurred in my and been written in my journal, they have been taken into consideration and they have been duly posted into the ledger of mine. Now there are a few more steps that we can take in order to detect these errors. So as an auditor, my role would be that I will always try to verify the total of the trial balance. I will also compare this year trial balance with the amount being shown in the previous trial balance, so that I will be able to find out that there is no major discrepancy between the amounts. Also if there is any kind of a major difference being shown in any item, I should also try to find out the logic behind it. Plus, I will also make sure that whenever we are rounding the figure, the amount has been properly rounded. Also, I will make sure that there has not been any kind of a change in the place of the figure while we are mentioning the data. For example, sometimes the clerk might have written the amount 45 as 54. So, that kind of a transposition of the figure need to be checked by the auditor. Also, I will look into the books of original entry and make sure that every data has been posted into the ledger and nothing has remained unposted. Plus, the final solution that is there in my hand as an auditor is that whatever is the task that I am doing in order to find out the error being there in any kind of a book of account, I have to scrutinize these books very carefully. If I am doing my work with sincerity, obviously nothing will go beyond my checking, and I will be able to detect all these kind of error being committed by the accountant or a bookkeeper of the organization. Now, we will discuss about the secondary objectives of the auditing, and these revolve around the detection and prevention of frauds. Now, let us take a look first. What do we mean by the word fraud? So, as we know, I was using this word intention. So, error, our intention are pure, that is we call it as nothing malafide intention was there. But when we use this word fraud, so basically fraud means a person, though he or she is showing that as if they are committing a mistake, but that mistake is a malafide mistake, because your objective here is that you want to deceive somebody and you want to get some kind of an extra advantage of deceiving somebody. So basically fraud is a intentional or willful misrepresentation of transaction in the books of accounts by this crooked employee of the organization, when they want to deceive either the owner of the business or the shareholder of the business or any another stakeholder of the business. But here their intention are always malafide. Now, what are the different kind of ways through which normally any accounting personnel or accountant can commit a fraud? So, these are being divided into three parts. One we call it as misappropriation of cash, another one we call it as misappropriation of goods, and another one we call it as manipulation of accounts. Now, what do we mean by this misappropriation of cash? As you all know that the most liquid and the important asset of any organization basically is cash, and since it is less bulky and doesn't have a much of a weight, so it is very easy for a accountant or a bookkeeper to steal the cash from the organization. So, what they do is they try to give some wrong information, they insert some wrong data into the books of accounts. Like for example, they will show the purchases of some extra amount, like purchases is done for rupees 10,000 and they are depicting it as rupees 50,000, and the balance is going into the pocket of the personnel. So, misappropriation of cash is a very common method of stealing the cash by the dishonest employee of the organization. Now, another way of committing a fraud is when the accounting people or the people who are maintaining books of accounts, they also try to enter some fake data into the books of accounts, and then they try to steal the goods from the organization. Basically, those business unit where you are a manufacturing concern and the raw material that you are using or semi-finished goods or finished goods that you are having obviously are of a higher value, but they are less bulky weight wise. So, the chances are that your people will try to steal those goods from the organization. So, misappropriation of goods basically means when by making a wrong entry into the books of accounts, the people try to steal the goods from the organization for their personal use. Fine. So, another reason of manipulation of account is when the board of directors do not want to increase the salary of the employee, they do not want to raise the dividend rate of the shareholders. In this situation, what they do is they manipulate the transaction in such a way that they show their profit than the lesser than the actual one. Now, if I am an auditor, what would be my role to detect these kind of a fraud being committed either by the persons engaged in the accounting part or even the higher officers of the organization? So, first of all, what my role would be that I will examine all the aspects of finance from the source of income to the area whereby I am incurring these expenditures. Then obviously the important technique under auditing is a vouching. So what I will be doing is, in order to find out the correctness and the authenticity of our transaction being mentioned into the books of accounts, I will always go for vouching process. That is, I will match all the transaction mentioned into the books of accounts with their correlated documentary evidence in the form of a voucher. Also, since we are talking about fraud in the case of stealing of cash or goods. Now, in the case of stealing of cash, the common way of stealing the cash is when we manipulate the transactions into the books of accounts, especially related to wages. So, in this situation, it is my role to thoroughly check all the records related to wage earners and the data related to the calculation of their wages and amount being paid by the cashier to these laborers. Also, I will try to find out what is the basic method being adopted by the organization to calculate their stock value, and I should make sure that in the same manner the value of the stock has been calculated by the accountant. I will also try to check up all the registered related to the maintenance of stock. So, based on this goods inward, goods outward book or delivery challan, I will make sure that none of the goods have been stolen by the employee of the organization. I will also calculate few ratios by myself just to find out whether the management has done any kind of a manipulation in the books of accounts or not. And whenever I find any kind of an unusual item being mentioned into a books of account, I need to go for a thorough checking of it. I will also try to find out those areas where I have some kind of a suspicion over the transaction mentioned into the books of accounts. So, I need to probe that matter into detail. Plus, as a precautionary method, what I can also do is that I can always, as an auditor, make some kind of a surprise visits to the business unit while I will go and check their books of accounts. So, this is all about our unit 1 and module 1 of auditing, dear students, in which today we had discussed about meaning, definition and objectives of auditing along with the introduction of auditing. In our next module, we will be covering data regarding types of audit and difference between financial cost and management audit.